Any advice and information from this podcast is general only. It has been prepared without taking into account your individual circumstances and needs. Before acting on any advice from this podcast, you should assess and seek advice on whether it is appropriate for your needs, financial situation, and investment objectives. That's it. Oh, you done it? No, that's part of it. Ladies and gentlemen and everyone else, we are back in a bit of an impromptu episode. What do you think, J-Mac?
Hello, everyone. Welcome back.
Yeah, it's been, look, we're going to be honest. We are back by hugely popular demand. There's not enough hours in the week for this whole podcast gig that we've unearthed. But as we mentioned, J-Mac's definitely sort of had to do a few extraordinary things over the last few weeks with clients and just what's been happening in the current markets. J-Mac, you sort of want to give us a bit of an outline on that and what's been happening the last few weeks?
Yeah. Well, I feel like everyone's kind of avoid what's happening in the world at the moment with Donald Trump.
Oh, a little orange leprechaun. Yeah. Look, hopefully he hears that. He'll probably call me a chump or something, but that's okay. He's, look, long story short, everyone's no doubt seen it on their phones or on social media or through news outlets or mainstream TV. There's been a lot of sort of chat and hype about what has been happening, not only in the Australian markets, but the international markets, especially we're talking markets as not as in the Sunday flea markets where you can buy trinkets, but the share markets, whether it's Australian or international. Jesse's mate Trump is kind of, he's done a few things that he thinks is the best for the long term for his country in America, but it's had reverberating kind of effects throughout the world. And we've definitely seen that, I guess, from our experience as financial advisors with potential clients and current clients. It's been all over the news. I think Jesse's been answering 3 emails at once, 3 laptops going, hey, kiddos and clients, just hold your horses. Remember our plan.
Well, it's scary, right, to see all that's happening in the media and in the world and then, maybe log into your super and see your money going down because of what's happening or...
Wait, what? Is this affecting my super as well?
Yes.
What the... Okay. All right, I'm just going to go off in the corner and cry a little bit. No, that's right. No, that's very true, and that's all part of it. If you've got money, and you most likely have got money invested in some sort of Australian or international share markets, whether it's American, European, Asian, you would have felt a little bit of a bump that happened, or essentially a correction. It was about 10%, close to it, give or take. That happened a few weeks ago. And as we mentioned, that's been felt everywhere. And we're sort of here. We just thought we'd, as we said, by popular demand, to sort of have a bit of a chat, a bit of an overview about it and just see if we can outline a few factual things, maybe help put some people at ease. But as usual, this is very general advice. By no means are we telling you to go out and buy more or log into your super account and change everything to a very defensive asset. Let's just kind of get through it. And then, look, if you've got any questions, reach out to any of your advisors or I don't know if we should say us, but no. So here we go. Okay, Jesse, what has been going on the last few weeks and why has this sort of given the share markets a bit of a tickle, as I'd like to call it?
Yeah, it's really interesting as a financial advisor seeing what's happening in the world, like tariffs being put on most countries in the world and then looking at, say, the market or maybe the S&P 500, which is the top 500 companies in the world. And you see a dramatic kind of drop in the market price or the market. And I believe that's usually due to people not having confidence in the market, as in, if they see these tariffs go on to, say, all these countries and maybe they think, maybe I'll invest a little less and maybe invest later because of what's going on. It's all very uncertain, which is, a trademark of the current administration in the US.
It has, it definitely has cast some sort of uncertainty, whether it's sort of, it's given a shake up to, the tariffs will essentially have an ongoing effect where it's going to sort of potentially limit what Americans are now going to buy in their own country because they're going to pay more for it essentially, especially if it's Chinese goods or whatever. And that's, as you mentioned, it's kind of done its a bit of a shake and bake throughout, pretty much all the markets or most of the markets that we know about. And I think, look, as we mentioned, he's trying to do it for the potentially the long-term benefit of America, but it's having kind of reverberations around the world. And I guess a few countries now are going back to the negotiating table, which I think Trump is happy to negotiate with, I guess, if he can get it in his favour with America. But it's definitely had a significant effect. And as you mentioned, have you had a few clients sort of either emailed or given us a call regarding, hey, how come my super or my investment portfolio just took a 5 or a 10% drop in the last sort of week?
Yeah.
How have you worked through that, Jessie?
It's understandable when you see maybe your portfolio is worth $100,000 in super, and then you see it drop to 90,000. You're like, what the?
Yeah, it's you could have spent that with a pretty big night in Vegas, I guess, if that if that was sort of your way inclined. But so what does it mean for investors? This it happens sort of. It's been happening in the past few days, but definitely a couple of weeks ago. What does it mean for investors, and what should investors look at doing for this?
Yeah, well, it really depends what you're invested in. If it's a long-term investment, say in an index fund or something like that.
Okay.
Knowing that it's a long-term investment, hopefully you've already thought about that, if the market does go up and down, even if you go back to COVID, you kind of saw a dramatic drop in the market, but it bounced back. As we all did.
Did, yeah. Well, as not to harp on about COVID, but once the smoke sort of settled and people went back to their sort of everyday lives, depending on what country and what state you lived in, you went back to being employed or working, shops opened back up, travel sort of reopened. Those companies that I guess contribute to the global share markets went back to creating revenue and a few companies got found out sort of, I guess, on how they run their business and their structures, and they sort of went under or needed to be bailed out. But yeah, no, you're right in that way. And just to highlight what's happened in the what we're talking about, the markets, yes, we outlined it's not the flea markets on a Sunday, but this is more respective of, your global equity markets or share markets. This isn't really to do with, I guess, the crypto market or the real estate sort of or property market. They kind of run on their own sort of.
Very different, yeah.
Yeah, okay. So, and look, you mentioned as an advisor, what else have you sort of been doing with your clients when they've given us a call or come in a bag full of cold sweats? And which is understandable, I guess, and that's part of our job is to coach, nurture. I was offering out some cuddles and some pats on the back. I don't know what you were doing, Jessie. I know you were pretty busy sort of with that, but what are some of the things you were sort of having a chat to your clients about on their big changes in their super or their investment portfolio?
I think the biggest or the worst thing you could do is, and I know it's hard, is not to panic and realize that we've been through, the GFC, COVID. As long as there's consumerism and people are buying stuff, everything's eventually going to bounce back and be good in the long term. But just not maybe, if you have a superannuation fund that's invested in the default strategy, which is some Australian shares, international shares, some cash, not changing it to be all in cash.
Has anyone done that? Did you have any clients do that?
No, I didn't actually.
Ooh, yeah.
Yeah, because as you know, when you put it all in cash is very stable, earning maybe 2-3%.
Yeah, maybe, yep.
Doesn't get a chance to bounce back like shares
Correct.
do.
Yep.
Yeah.
And is that something you outline to your clients? Like, look, and we'll get into sort of the reason why you invested some of your money in the share markets anyway, but, seeing the news, reacting to the news, logging into your super, your investment portfolio and changing your allocation to cash to try and sort of, escape what's just happened in the markets. You might have already taken a 5 or 10% hit. You're unsure if it's going to keep on tumbling. As we saw a few days later, it kind of recovered itself. There was a fair bit of volatility there, and we've always sort of talked back about share market it's risk versus reward, and there's a bit of short-term volatility that comes with that, and that's what we got the other day. Yeah, and I definitely had some questions on should I be changing my allocation, and that's a very short-term question. And not to say other advisors will mention this, but for our clients, it's definitely about looking at we readdress the question of what is your why? Why did we start a certain type of investment for yourself? Why did we maybe discuss that share markets might be good for you? And this is what you need to sort of come back to, especially when you see a sea of red that happened a couple of weeks ago in the share markets. Okay, no, that's fair enough.
Can I ask a question?
Oh, God.
I got a good question. What if I sell my shares and put them in cash temporarily and then maybe buy some more shares when the market goes back up? Do you think that's a good idea?
Tell you what, I'm unsure of how many people out there could pick the exact top of the market, bottom of the market, the buy and the sell, or the, you sell all your shares at the Mozza price before the market takes a tumble. There's a range of ramifications for sort of this, and it comes down to the percentages, how much the sum that you've got invested, your timing. I'm pretty sure, not to take the words out of sort of Warren Buffett's mouth, but for someone as smart as him who's got 80 years of experience in this, maybe even more or less, give or take, but there's not too many people or companies out there that can pick the exact moment when the market, unless they're trading from the inside, I don't know if that's legal, that can really time this to perfection to when they're going to capitalize on selling all their equities, make a big profit, and then transfer to cash to smooth things out and then buy back in again.
But if I saw the market going back up, couldn't I just buy my shares?
You could, and potentially at a cheaper price, or you could miss the window and you could be paying more for them than what you sold a week or two before. There's a heap that sort of goes into that. But potentially you could, not to say you couldn't. And I guess that's where the day traders sort of fall in, and even your short sellers that are out there, they'll have the up-to-date sort of market algorithms that feed them the intra-second effects of the market and when they're buying and selling. But I guess that's a story for another day.
Yeah.
But, by all means, you can give it a red-hot crack if you think you can turn $1 on it. Is that what you were doing?
No.
Okay. Yeah, and there's a range of other things that come down with it, but I guess.
So should I continue to kind of keep buying shares through this time
as the market's going up and down?
Yeah.
Ooh, that's a good question. I know we like to use a bit of the analogy of when things go on sale. A lot of our clients and people in general, their eyes seem to light up.
Oh, like a good sale.
When they see a sale. I dare say you're definitely one of those. Hold on. If Louis Vuitton was having a 10% sale, would I buy more? That's a possible yes.
Mm-hmm.
But in shares, if you believe in the shares that you're buying and you believe they're high value, reliable companies for the long term, then potentially yes. I guess whether you're a fan of Toyota, which is a pretty good middle of the range car, if they were having a bit of a 10% sale, potentially you'd be inclined to buy it again. But I guess shares, because as the market, I guess as we saw the other day, it was going down. If you're still spending $100 a week on shares, regardless of price, yes, you're buying them at a cheaper price, which means you're getting more for your $100. But then you've got to be able to wear that as well when the share price goes up. But potentially, yeah, there's if you're invested in the long term, then generally speaking, look, you could be a little bit braver and continue to buy. But what happens if we have another GFC tomorrow, which could happen, or which will happen? We will get another, I know you're only like 21 or whatever and I'm 50, but we will, in the next foreseeable future, there will be something similar to the GFC that happens to the share market. So does that mean you should just stop buying altogether? How does that work, J-Mac? Would you, if we have a GFC and the market's tanked by 40%, would you go back and buy again, or would you continue, or would you stop your strategy that you have for the long term of buying shares?
Yeah, it's interesting actually. We just did an article recently on how much the stock market goes up and down. Just trying to remember the exact figures, but it's not unusual for the stock market to go down by 10% every couple of years.
It can, yeah.
15%.
Yep.
So like you said, there's always going to be GFCs. Hopefully no more COVIDs.
The COVID thing was an anomaly because that was sort of, I guess, a more medical health pandemic driven, but it affected the global markets. It affected the global share market significantly. Literally within a few days or a week, 30 to 40% was kind of wiped out. And you talked about that whole, hey, hold on, I had $1 million in my super and I'm about to retire, and literally a week later COVID happened. I've now only got, say, 700,000 in my super. Like, what the hell?
It's very scary, isn't it?
I can imagine it would be for someone who's about to retire, and that's going to be their main income source for the rest of their life, and they're hoping to be self-funded retirees. It's a significant event to happen to your lifelong wealth creation that you've made. So, but I guess generally speaking, we sort of talk clients through that on, hey, maybe at the age of 60, maybe you shouldn't be holding all your money in shares. Well, if you are, then just think about when a big market event happens, whether it's that correction that we just had a little while ago, or if we get another big bump at GFC, if and when. I mean, who knows what or how long this tariff war share market volatility thing is going to ride out for.
Yeah. You said something interesting too before, Yannick. You were saying how long, it took the GFC and COVID to recover.
Yeah, there were essentially two sort of different recovery periods. The COVID thing, which everyone remembers relatively freshly, a bit give or take 5 and a bit years ago, recovered relatively quickly. We had a big, say, give or take 25 to 40% drop, depending on what indexes, but as a whole, it was around that figure. And it recovered sort of, from top to bottom, back up to top again. A lot of the share prices have recovered within a few months, depending on what companies and regions, but the GFC took a lot longer. You were talking about 18 months, give or take, and even longer for some of those big indexes to recover. So the time spans were different, and that's significant for someone who's in their 20s or someone who's in their late 50s, 60s, especially with Australian sort of super rules. 60 is kind of that magic number for a lot of retirees or upcoming retirees. They might have a big majority of their super funds invested in shares, Australian or international. 20, 30%, as we outlined, on their life savings is a significant amount.
Yeah.
Whether it's 100,000 or $1 million, that's going to fund their retirement. And if it drops by several 100,000, I can imagine the cold ice baths that they need to take. I don't know if people resonate with the film clip from Ace Ventura when he finds out that Inkle and Einhorn is Finkel and Finkel and is Einhorn, and he's having a cold shower, and that's maybe the moment some people have. But I don't know if you're able to YouTube it, it's pretty funny, but that's how I kind of relate to it. I don't know if that's PG enough for this podcast, but we'll keep it in there. Everyone draw a mental picture of that or YouTube that Ace Ventura moment. Anyway, shout out to Jim Carrey. Classic. Okay, so investing in uncertain times. You could, with the amount of media and press that's all over this, what's happening with the with the tariff exchanges, countries are renegotiating. Some like China are like, whatever.
Yeah.
Come at me. We've been around for thousands of years. We'll be here for thousands of more years. And, there's even, you dare say you would have seen on the news, there's a heap of, what's this, TikTok? No. Like a lot of direct manufacturers are essentially, not to say advertising, but making clips on TikTok, letting especially Americans know that, hey, the American companies are charging you 20 grand for a bag with a certain brand on it. It's made here right in this factory. Before we put that brand on it, it costs $150 to make. And just to maybe bite back at Trump a little bit, they're essentially inviting you to potentially buy directly from them, not for 10 or 20 grand, but for a couple of $100, and you will essentially get the same product. So there's a heap. There's a fair bit happening out there, and this is what you'd sort of call in uncertain times. Not to say this has happened before, but key market events have happened over the past decades, and these will happen into the future. So should I still be investing in the short term? Should I still be buying shares tomorrow, Jesse? Should my super still be in shares, or should I move it all to cash because I know that that's guaranteed? Like, how do you sort of answer those questions for some people?
Yeah, I guess it depends on your situation, but, like you said, they're on sale.
They are. But what happens will this just keep on sliding? What happens if we have this big bump and it keeps on going down 10%, 20%? That's sort of in the bear market territory, 30%. Should you keep buying? Or, how do I wrap the psychological side of it? How do I get my head around this?
It is hard because you're kind of in an emotional state, reacting to the news and
would you say
everyone
a glass
talking.
case of emotion?
Yeah, sure.
Anyway, carry on. Sorry.
But the benefits of, the intelligent investor, or the best type of investor, is having the ability to ignore the news and what's happening.
How do you ignore the news? It's on
world.
you look at it every day. It's at your fingertips.
Well, I was watching this YouTube video the other day, and this guy who's doing, the FIRE movement.
Financially independent, retire early.
Yeah.
Yep.
He made himself a list if this happens, say if it goes down by 10%, do this, maybe get a second job if you're worried, or, go for a walk and chill out a bit.
Yep. Is this before he does anything like sell, or convert to cash? Or
he's very reliant on his money. So he's made himself a plan because he knows he's going to be in an emotional state.
Surely not every human can do that though. And we've met a few clients that I guess it's good to be emotional, but sometimes if you let those emotions take over you and override your long-term plan that is there, that'd be hard. I find it hard. I'm an advisor.
Yeah, I guess the more you do it, the more you get used to it as well, and you can rely on people like your financial advisor.
Are you saying be like a robot? Just burp. I will buy more shares. Is that and look, yeah, everyone's different and not everyone's programmed that way. But if you understand the what or the why of why you started investing in the first place, because let's be honest, we've mentioned this on a few of our podcasts. Everyone's had that story of whether it's their grandparents, their auntie, uncle, best friend, have had that moment where whether it was the GFC or COVID, absolutely burnt them. Not to talk sort of whether it's crypto or real estate, but definitely in the share markets. Oh, don't put any of your money in the share markets. Remember what happened to Uncle Bill and Auntie Betty? They had their super was in
Betty.
shares. The GFC happened. They were about to retire and they lost everything. Well, they probably didn't lose everything. There's a lot more to that backstory, but yes, their value would have gone down 100%. We're not definitely not denying that. And the facts are there. The GFC rocked a lot of people. It depends on what you did during that event. As what you mentioned, Jesse, obviously those people didn't have that list that guy was talking about. He would have probably taken a breath, read that list that he maybe wrote out when he started investing on the why is he investing, stuck to the process, stuck to the plan. He's not worried about tomorrow. He might have had a 10-year plan or a 15-year plan.
Yeah.
Especially in Australia, superannuation's this long-term plan. Sounds boring, sounds painful, definitely not that sexy, but I guess when you sort of have a look at the long-term plan and hold to it, it'll bear fruit in the end.
Yeah.
Yeah, that's a valid point. Okay. So to maybe sort of summarize on a few things we've talked about with this recent update, does this drive back to the why? Because it's a bit of an unnatural plunge for a lot of people that maybe don't know that much about the share market or investing. Why did they start investing? What sort of got them over the line? Because there's a lot of clients that we met that are like, oh, I don't really want to invest in shares. I had a relative of a friend that lost a heap of money and it's pretty risky. Hey, can we talk about crypto? And I don't know. I kind of give them a bit of a look and sort of go, yep, happy to talk about it. But once we go through all that murkiness, we get down to the why. Why do you want to invest? What's it for? Is it to be insta-rich tomorrow or next week? or is it to build sort of wealth or over the long term? And is that kind of how you address some of your clients as well?
Yeah.
I thought you were one of them advisors that's like the overnight get wealthy. Is that you?
No.
Oh, okay. Yep. I was just double checking.
Yeah.
I just wanted, okay.
Isn't it funny when you kind of deep dive into those stories, more details come out that,
That is correct.
if someone's an overnight success, maybe they've actually been working on it for 10 years or 20 years.
Yeah, that is, that's deep.
Very interesting.
That's
But
very deep, J-Mac, yeah.
Yeah. I can be deep sometimes, But yeah, if you know your long-term goal, like if you're using shares or, the market or index to retire early or, give generational wealth to your kids.
Or, grow wealth, I guess,
Yeah.
outside super or, I know what you mean. Because look, we implore everyone to maybe do their own Google research, maybe compare, whether if you put all your life savings as a general outline, compare what your money in a savings account would have grown to in the last 10 or 20 years or even 30 years and compare that to if you'd had it in certain indexes or even some certain shares out there. And let's just see which one, I guess, maybe comes out on top. It'd be very interesting, but we've definitely got our answer because sometimes the numbers don't really lie. And that kind of comes back to the why, doesn't it?
Yeah. And
Big
just,
one.
just know that, the market's based on consumerism. So people are always going to keep buying stuff unless there's like a zombie apocalypse or a meteor that comes and, disintegrates the earth. People are always going to buy stuff.
What happens? What do you think will happen if the next meeting that Trump and Putin have and Trump just slaps him one? What do you reckon what'll happen then?
That'd be very interesting.
Then you'll have to definitely readdress your why you've got money in the share market because we could have bigger problems than that.
Yeah.
Yeah, because that could be more monumental than the GFC. But that's a story for another time. I'm happy to
Let's leave it at that.
game plan that out. But okay, so the why, coming back to your why is the big one and why you started investment. That's a big one, and that might hold you true to sort of why you started and keeping that end goal or whatever your goal was in the back of your mind. That might maybe sway you or maybe stop you from logging on after you've chatted to your mate or your auntie and uncle have told you, have you seen the news? The share markets are melting.
They do that.
Yeah, and that might just stop you from going, okay, cold sweats means I need to change over to cash. Maybe this list is, you know what?
Yeah.
Shout out to all my new clients out there, whoever it is I see. I'm going to make them start some sort of list. No. Okay, cool. All right, until next time, Jessie, take it easy.
You too. Thanks, guys.
Ciao. Bye.